You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning, traders. This is your Options News Rundown for Thursday, June 28th. Our first story today is from CNBC. The U.S. economy slowed more than previously estimated in the first quarter amid the weakest performance in consumer spending in nearly 5 years. But growth appears to have since regained momentum on the back of robust labor markets and tax cuts. Gross domestic product was increased at a 2.0% annual rate in the January to March period, the Commerce Department said on Thursday in its third estimate of first quarter GDP instead of the 2.2% pace it reported last month. The economy grew at a 2.9% rate in the fourth quarter. The downgrade to the first quarter growth reflected weaker consumer spending and a smaller inventory accumulation than the government had estimated last month. A $1.5 trillion income tax package, which came into effect in January, is seen spurring faster economic growth in the second quarter, putting annual GDP growth on track to achieve the Trump administration's 3% target. Economists, however, caution that the administration's, quote, America First policies have heightened fears of trade wars and are casting a pall over the economy's prospects. Our next story today is from Reuters. The flood of requests from U.S. manufacturers with the Commerce Department to exempt them from the Trump administration's hefty tariffs on steel and aluminum imports is exposing competitive information to rivals, U.S. customers and U.S. metal producers. The tariff exemptions process is a new front in the battle between the U.S. steel and aluminum customers, fighting to keep prices for those metals down, and the U.S. metals producers, which argue that foreign rivals have kept prices low with unfair trading practices. So far, over 22,500 applications for exemptions have landed in Washington, with more to arrive each day. Over 4,000 objections have been filed, which is also expected to grow. The makeup of the metal complicates the application process. Steel is not a single commodity, but rather a complex market made up of hundreds of different grades and types of metal that vary in terms of ease of stamping, resistance to breakage, and other properties. For many uses, a new steel supplier has to be certified to assure that the steel meets the end customer's specifications. Another issue is staffing. The Commerce Department is rushing to hire workers to handle the applications, which has many applicants worrying that the government workers will be ill-prepared to sift through the arguments. The final story today is from Bloomberg. Amazon is buying its way into the heart of the U.S. healthcare system, instantly shaking up prescription drug industry in the midst of a broader transformation. Insurance companies and drug benefit managers have struck a series of deals in recent months, designed in part to thwart a potential big splash in the health world from Amazon. But the online retail giant's decision to buy online pharmacy PillPack rapidly accelerates the threat posed to entrenched retailers, suppliers, and middlemen. Most immediately, The move represents a formidable challenge to pharmacy chains including Walgreens Boots Alliance and CVS Health Corp, two of the largest drugstore chains in the U.S. Walgreens shares sank 8.5% at 10:49 a.m. in New York, while CVS shares has shed 8.9%. For now, Walgreens indicated that it was in no hurry to find a deal to respond to Amazon, despite the damage to its stock. On an earnings conference call, Walgreens CEO Stefano Pessina faced multiple questions from analysts about the PillPack deal. He said that Walgreens knew that PillPack was for sale, and it had been for sale for a while, but the retailer didn't do any deals based on emotions or make moves that could destroy value. Pessina said that physical pharmacies would continue to be very important. The slump in Walgreens shares weighed on the Dow Jones Industrial Average, which added that stock to its index of 30 companies earlier this month, replacing a longtime stalwart General Electric. That's all we have for today. You can find all of these stories and more on theoptionsinsider.com. I'll be back tomorrow with more options news you can use.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.